that we were having earlier in the room. I think Mike even mentioned it as well. The Bank of Japan is rarely on the move, right? So the Bank of Japan is one of the big points that bond traders are paying very close attention to. So to see the Bank of Japan, to see the Japanese yen at a premium to bonds, I don't suppose is actually that big a surprise. Yeah. So, you know, we mentioned this morning. It's not a big surprise because the last time the Bank of Japan actually was on the move, really on the move, was years ago, right? So to see the Japanese yen premium to get against bonds, not really that surprising in anybody's book. So the good news is, well, we can use that as a hedge trade, can't we? If we want to, we can use it as a spread or a hedge trade. So with the Japanese yen massively premiumed up here, and you start buying bonds in here, you can sell some yen against a long bond position, can't you? And you saw the yen then drop down hard and it dropped down fast here. Well, the same thing happened over here. Look at the yen. The yen was making tested highs when we're buying bottom edges on bonds. That's not very often that happens, right, bond traders? That very rarely happens that we can sell top edge yen and then buy bottom edge bonds and then sell top edge yen and buy bottom edge bonds. That rarely ever happens. So when it does happen, it means we can buy even more bonds at slightly more aggressive prices because we're getting a spread trade. Because we're getting a spread trade, right? Hold a second. So I hope this makes perfect sense to you guys. As I said, I think Mike mentioned it as well this morning. If it wasn't Mike, forgive me, it might have been Reeve. That somebody mentioned it this morning about the yen anyway, but we certainly talked about it in the room regardless, and you can see that the yen's given us a great opportunity to work short yen against a long bond position, so it enabled us to buy a lot of bonds at prices that perhaps you would never have considered because you're already sitting on a sell on the yen. You see why that makes sense, guys? Because it's not about the price on bonds anymore, is it? Does that make sense, Jack? If I'm trading a spread, it's not about the price on one piece of the spread, it's about the spread price, isn't it? So we can buy the bond anywhere. So long as the spread is still good enough, we can buy the bond anywhere. So we don't need things like level 2 liquidities, we don't need lower lows. We just need the spread to be good enough. So when you've sold the yen at the top edge and the yen's away down here, I can buy the bond pretty much anywhere. So I don't need to get level 2 liquidities. I don't need to sit with a passive buy order away down at bottom edges waiting for trades. I can start executing anywhere. And obviously that means that you were able to cross quite nicely into the 12s, the 13s, the 14s, even as high as maybe the 16s. And obviously the yen still massively premiumed. And obviously if you wanted to, if you did trade that as a spread trade, then of course you scratched out the yen short position and the bond exploded north for your big winning spread of the day. I still don't know why more people don't trade these spreads. They are brilliant, and when you start trading spreads, you'll rarely ever go back to outright trading, guys. Very rarely will you ever go back to outright trading. Think about the fun that Amin and Paul had trading against an open option position. The pressure was right off because they had an open option position, right? So they knew that they would make money if they closed out a position because of the time decay and because of perhaps they closed out the position because the market was moving for them. But then they were able to get back into a position where they wanted to because they're still in an open position that's making money. Well, in a spread, that's what happens. On every trade you take, you effectively have a hedge against anything that moves, and therefore what you end up trading is the spread. And as I said, when people start spreading, they rarely ever go back to outright trading because they see the value. Because I can now go into an outright yen position, or I could go out to an outright bond position depending upon how I think the market's going to evolve. I could skew the hedge. I can turn the hedge into outrights at any point. I can turn it into a perfect hedge if I need to. There's a lot more outs for me when I trade spreads. A lot more outs. It's the same as why somebody trades a knob spread trade as well. There's a lot more outs because you've got one short bond and one long note, or vice versa, right? So there's a lot of outs for me if I was to trade the bond spreads like the knob spread or the tut spread. So you can see anyway, we got a good rip higher anyway on the bond. It's been one of the better trades today, of course, nearly $2,000 as I mentioned, into the eights. Yen's diverging in the background as well. Let's take a look at the prediction side of it. Now, obviously, the idea of the predictor is that we buy or sell the blue line. It should have a value divergence as well. Okay, so the bottom edge was early, but remember, we were short yen, so it didn't make any difference at the bottom edge. But take a look at this narrative here. What the hell is even that? If that's not a buy trade, guys, I don't know. If that's not a grail buy, I don't know what it is. The bond price should have been going straight up, shouldn't it? It should have been straight up at that stage. So in other words, all of this is grail. All of it is grail. And obviously from that grail, you can see we ripped the top edge clean through the top edges here. Now you can see obviously there's a divergence creeping into this, but obviously we were still on the juggernaut called real yields at that stage. But you can see that there would have been profit-taking opportunities. That's not in question, because it was profit-taking opportunities to sell into those higher highs. Brilliant, isn't it? Absolutely superb. And at the top edge, I don't know if anybody decided to flip, but you can see that there was the lowest low in the red line, blue line relationship was there. You can see obviously there was a retested high after that line's put in. And obviously if you decided to then flip into a short sale, you've just sold some 7s and 8s down to 30s for a little bit of short selling loveliness as well, based on a grail sell at the top edge. So if you were still long, of course, that would be your final exit. And you'd be waiting for some new information. So pretty good. Yeah, it's all right, mate. It's all right.